Hi and welcome to the big picture. So if you fail to look at the bigger picture when you're trading, in the short term you may get away with it sometimes, but if you fail to do it regularly, you're going to get bitten at some stage, and most likely more frequently than not. If you want everything to align, then you've got a better chance. If you get everyone to align, you've got a better chance of making money, and that's really what we're looking to do. Just shift the balance in our favor. Now, being in our favour looks at things such as what the banks are doing, central banks are doing, what the big money is doing, and what the big movers are out for the week ahead. So let's take this week then. So looking at the US dollar, there's a lot of calls. People are starting to get bearish on the US dollar and expected that it's hit tops and it's not going to move any further, etc. Now, I think this is a bit of a maybe just a pure technical view from some people, but it's not really taking into account the bigger picture. Now, there's an next change of interest rates is expected to come in a couple of days' time on the 19th. That is expected to be yet another increase, taking us up to 2.25 to 2.5%. Now, how's the big money are looking at this? Well, they're still long, significantly long on the US dollar. What other details may affect us? Well, on the 21st, on the winter solstice there, we've got the final GDP coming into play. So there are some factors which could be spoiling the dollar's run. And looking ahead for the big banks, there's the expectation now is that there may only be sort of one increase come next year in 2019 as opposed to three that a lot of people were originally suggesting. That's sort of dropped, and realistically I'm looking at some figures on this CME book or website I should say, looking at the Fed Watch there, and the potential is that the interest rates won't be sort of running up until sort of August, September time. The next sort of zone of rates is expected. So okay, the US has got a bit ahead of itself maybe, and people are judging what's going on by what's happened to the equity markets, which have been pretty negative. However, you've got to look at, as I say, the big picture all the time, and a lot of people are failing to see that from an employment point of view that things are pretty tight there. Inflation's still coming through in the US, which we saw last week, and there is potential for continuation of the upside to a degree, maybe slower, but you start then comparing it with the other pairs, and this is the important thing of your analysis. Look at what's happening with the euro, for example. Italian debt's still a problem. In fact, the French debt, Macron's got to go to Brussels this week to suggest that the French debt's going to be sitting there at 3%. They've got low inflation sitting in the eurozone. Okay, they have in the US, and it's not looking great, but one's just sort of actually dropping and not looking good at all. There's a slowdown in growth. We saw it last week, a really big shove down on the slowdown in growth on Friday there in Germany and France. And overall, looking at what's happening here, what's the big money suggesting? Well, we certainly know the bond buying is finishing. But there may be, and we're at 0% or actually a negative interest rate. There's little that can be done to stimulate things if we are going into a bit more of a world recession or a bigger slowdown, which has been implied. Now, looking at the sentiment, the longs are falling still. They're long, but they're falling on the big asset pension fund money is falling, and the shorts have been popping up again there. So the shorts on the euro are falling, going up. Trend-wise, technically, both from a weekly point of view and a daily point of view, really we're sitting more. Daily may be questioned somewhat as we're sitting on consolidated phase, but it really is weak. Looking at the pound, well, needless to say, we've got some there was some higher interest rates here. 2019, it's expected that there may be changes, and we've seen Carney suggest that there would need to be changes if Brexit was a hard Brexit. The absolute nonsense scaremongering coming from Carney as ever. Yes, there may need to be rate changes, but they may need to be to the downside, and it would be very foolish in increasing interest rates just on the basis of a knee-jerk reaction to what may happen. In terms of assets, yes, shorts, there actually is short side of things from the bigger money. I say assets, but asset funds, they're short, but the shorts are coming off there, and the longs, long positions actually increasing still from the hedge funds. The hedge funds are still sort of looking and thinking whether some sort of deal may be done, maybe. But okay, technically we're still on a downward trend there. There's from an intraday or a daily basis, there's probably more chances of some decent bounces than anything else there. But key news this week, we've got obviously Brexit continues. There's no answer to that. We've got inflation data coming out on Wednesday. We've got the base rate on Thursday, and the final GDP on Friday of the quarterly figure as opposed to the monthly numbers. So important data coming out this week, and we'll see what happens there. But there's the suggestion, if you're thinking the US dollar's going to be weakening, well, yep, we could have some positive surprises on the pound, but overall the picture's holding. Job-wise, it's and inflation from jobs is looking okay on the pound. It could be slightly, and it is to my extent. If you took Brexit out of the equation, it would be leaving the euro behind in that respect. Okay, the yen. Is ruled out near-term increases already. Last time, the short positions dropping slightly from the asset fund managers, but increasing from the hedge fund managers there. So sentiment's still short anyway. Bank of Japan conference on the 20th. On Thursday there, so watch out for that. At the moment, really the trends, okay, the daily may be changing here a little bit at the moment, but certainly the weekly trend is to the upside. Aussie dollar, now there's a big problem here for the Aussie dollar I see coming up, and the short positions are starting to increase from the asset fund managers. Okay, short term hedge fund traders probably reducing their shorts a little bit here, but you've got to realize that the Australian economy sits tightly bound to its biggest customer, which is China. Now China is slowing down. There's plenty of data out there to show the data is slowing down for whatever reasons. Perhaps a natural slowdown after many years of such strong growth, but for now it's slowing down. Sorry, the weekly trend here, I need to just adjust here, but it has been pushing up. I'll check that in a moment. Monetary policy minutes are due out the 18th. Employment data report comes out on the 20th. So key news this week. Canadian data. So the Canadian data there is still, well, shorts have taken over here. There's no chance of interest rate increases in the near term. Had October 2018 was the last change. At the moment, looking ahead here and looking at what the bigger money is doing, the short positions dropped off a little bit, but it did go short last week. The data wasn't available to me, hence why I didn't run through it, as it was delayed for a day and then everything caught up and I was busy, so I missed this last week. But the asset managers have gone short, have switched short, which is really just it's taken a bit of a time because the long positions have been reducing and it's basically gone short at the moment. Plenty of data out this week. CPI on the 19th, retail sales, GDP and business outlook on the 21st, so Friday, quite a big day on Friday. Trend wise, really still looking upwards. New Zealand dollar, okay, long positions still sitting there. In fact, they've been increased somewhat. The short positions reducing slightly on the hedge fund, so an agreement of the principles behind that. GDP is due out on the 19th, so on Wednesday, so at the moment it's still, well, I'll look back at those technicals in a moment. The S&Ps, well, long positions that have been coming off down to 59% now long. This is looking like it's not too far off for switching, and everyone's looking to increase their shorts. And we definite short, 51% shorts from the hedge funds there. So very quick look at the technicals here. I'm going to run through them very quickly. Daily still, weekly on the euro still bearish there. Last week ended up bearish. We're getting a bit of a bounce today. At the moment it's come back to its weekly pivot, just feeding around that at the moment. But the biggest thing we got here is chop, and that could well go. I've left it as more bearish because we've got a lower high confirmed in the smaller time frames. So that's all I was really looking at there. I'm just waiting to see if this rolls over this afternoon. It could do. But we're sitting there with chop. Cable, very bearish week, another low for the week there, or another weekly low, and pushing down to this all towards that 120 area. Maybe we'll see. Daily wise, well, it's still in a bearish trend there, and yes, it's pitched up a bit to the weekly pivot, but that too is looking soft. Dollar yen, just to confirm, well, it's still bullish. Last week it just sort of pushed up. Still erring on the bullish side. It could still pitch up further. Uncertainty can see it sell off like we saw on Friday there. It's pushed back, not got back to its weekly pivot yet, but I'm looking at the potential for that to be seeing or giving bounces. We'll see. Aussie dollar. Well, I've suggested this is still in a sort of a bullish zone, and it potentially is. There could be more of a bounce to come, and we saw a bounce last week, although it's pulled back, which may give us may question that a little bit more, but there is potential for that still to push up there. From a daily point of view, okay, it's may have been spoilt by effectively where it did bounce last week. It's now giving us a lower high on the daily, so still not got up to its weekly pivot. It may do soon, but maybe the dailies is over on there for now on the Aussie dollar. As I said, I think that technically, big picture wise, fundamentally rather, it's weak. Canadian dollar, I continue to shout for the upside on this chart against the US dollar, Canadian dollar. It's weak, and I see further upside potential. It's consolidating where it is. This consolidation may be followed by a bigger push at some stage. New Zealand dollar briefly then, and well, it's been selling back. It's still in an upper trend there in that sense. Daily wise, it's looking a bit soft. It put a lower high in mid last or early last week. But maybe just it'll be interesting to see how it does around its monthly pivot. If it sells back to its monthly pivot and manages to bounce, we'll see. It's looking a bit iffy at the moment, but fundamentally there's still chance it may push. And finally, the S&Ps. Look at the S&Ps technically from a weekly point of view. Well, they've broken the weekly 100 now. It's looking soft, and we could see a bigger correction coming through here yet. And it's we saw last week, early last week, it tested the 500 there, and well, it looks like it's coming back into the area which I've highlighted from previous highs and lows there. Where it could be sort of a key sort of chunk that it may sort of run into. So it's definitely confirmed a lower high here on the weeklies, and it does look bearish. Okay, that's it for me. That's the big picture. Have a great week. Bye for now.